Hello friends, welcome. This video is an attempt to explain the basic concepts of deemed international transactions. And I'm going to discuss this concept in the context of transfer pricing provisions, which are there in Income Tax Act 1961. Many of you might be knowing that if you read the chapter 10 of Income Tax Act 1961, you'll understand that there are certain sections, section 92 series sections are there. These sections are talking about some special provisions regarding avoidance of taxes. And this chapter deals with transfer pricing provisions. Normally, we understand this that transfer pricing provisions are applicable to international transactions, but there are certain transactions which are also covered. They're called as specified domestic transactions. There is a need to understand what is an international transaction, what is a specified domestic transactions. And this the specified domestic transaction should be between associated enterprises. There is also a requirement to understand what are these associated enterprises. But in addition to that, what is more important is that even if transaction is not between associated enterprises, or it is not exactly international transaction, in certain situation, a transaction may be deemed to be a transaction between associated enterprise, and consequently, transfer pricing provisions may get attracted. So let us understand this concept. Let me share my screen with you right now. So yes, just give me a second. Yeah. So what I'm showing you right now, you see, I think screen is visible. Just I want one more second. Yeah. So what I'm showing you right now, this is the section 92. You can look at this section. I'm not going to read the section line by line. You can pause the video and read it. If you look at here, it is talking about that any income arising from international transactions shall be computed having regard to arm's length price. So the concept is that if there is an international transaction, there is a need to compute ALP or arm's length price. What is ALP? It is explained subsequently. We'll be looking into that. Right. And it also says, you see, international transaction, and this provision is also applicable to specified domestic transaction. Again, in some other part of this chapter, what are the specified domestic transactions? They are also explained. And if international transaction or specified transactions uh, and associated enterprises are involved, then this particular section gets subtracted. Consequently, the requirement of arm's length price computation arises. All right. And the requirement also, or this provision also says, any allowances for an expenditure, interest, cost, expenses, these are the things which are allowed to compute taxable income, right? So all these allowances shall be computed having regard to arm's length price. So there is a need to compute arm's length price if the transactions are covered as international transactions or specified domestic transactions between associated enterprise. Now from here, let me take you to section 92B directly, which explains what is an international transaction. You can look at the screen, you can find out the exact definition, what is the meaning of international transaction. It talks about that international transactions with transactions between two or more associated enterprise, either or both of them, either or both of whom are non-residents. That means transactions should be between associated enterprises. Either or both of them should be non-resident. That means any one of them can be non-resident, or both of them can be non-resident. So that is important. The one party should be non-resident as per requirement of section 92B1. Okay. So there should be associated enterprises. Either or both of them should be non-resident, and there should be some transactions. What are these transactions? These are the list of transactions. You can have a look at it. Purchase, sale, lease, provision of services, lending, borrowing, and other transactions which are having a bearing on the profits. Okay, or transactions for apportionment of contribution, cost and expenses. If these transactions are there and they are between associated enterprise and either or both of them are non-resident, then that will be treated as international transaction as for the meaning which is provided under section 92B1. Fine. Okay. Now, if you move to next subsection, here the concept of deemed associated enterprise arises. Here, if you read it, we need to read it carefully. It says, a transactions entered into by an enterprise with a person other than associated enterprise. That means this provision is saying there should be a transaction. Okay, what is transaction? We have already understood. But it should be with a party or with a person other than associated enterprise. That means this person need not be an associated enterprise. Okay. Okay. If these transactions, this kind of transactions are there, then this shall be deemed to be transactions entered into between two associated enterprise. That means this transaction is with a party who is other than an associated enterprise, but it will be deemed to be a transaction between associated enterprise. Okay, if these conditions are compliant, what is the first condition? If there exists a prior agreement in relation to relevant transactions between such other person and the associated enterprise. So between these two parties, that is associated party and the other enterprise, if there is a prior agreement, then that transaction will be treated as undeemed transactions between associated enterprise. Or it says the terms of relevant transactions are determined in substance between such other person and associated enterprise. That means either there is a prior agreement or the terms of the transactions are determined between those parties. If any of these conditions are there, then even if the transaction is between transaction with a party which is not an associated enterprise, still it will be treated as a transactions between associated enterprise. To explain that concept, let me show you this picture. It will be more easy for you to understand. Let us say there is an associated enterprise here, associated enterprise A. There is another associated enterprise B. These two are associated enterprise. The provision says either both of them can be non-resident. Okay, either A can be non-resident, B can also be non-resident. Or A can be non-resident, B can be resident. Or B can be non-resident, A can be resident. Either or both parties. If they are non-resident, then any transaction between them shall be treated as one international transactions. Okay, then fine. If international transaction, then transfer pricing provisions will be applicable. They have to compute ALP, arm's length price. But the next provision, that is 92B2, is saying that let us say this is an associated enterprise. And there is a transaction between any other party which is not an associated enterprise. So let us say this party is not an associated enterprise. Okay, and still then, if this transaction will be treated as a transaction between associated enterprise if between these two parties, A party and this new party, if between them there is an agreement, prior agreement, or the terms of the transactions are substantially determined by these parties. If there is a prior agreement, the terms of the transactions are substantially determined by these parties, then this particular transaction will also be treated as associated transaction between associated enterprise. It will be deemed to be an international transactions, and transfer pricing provisions will be applicable. So all the requirements like documentation, preparation of transfer pricing study report, all these provisions will be applicable. Okay, that is the concept here. Right, friends? Okay, and one thing is important, that this party, new party, need not be a non-resident. Between these two parties, A and B, both of them can be non-resident or any one of them can be non-resident. Doesn't matter. But C need not be a non-resident. That means this provisions clearly says that even if this party is not related, not associated, even if this party is not in non-resident, still the transfer price provisions may get attracted. If you show you the provisions here, you see, if you see 92B1, it is talking about, you see, either or both of whom are non-resident. Specifically, it is mentioned, it is very clear. To define an international transactions, either or both the parties should be non-resident. But when coming to the next provisions, that means you see 92B2, those terms are missing. That either or both of them should be non-resident. This thing is missing. Okay, so that means even if the party is not non-resident, but it's a normal resident, still this provisions gets attracted. So this is the concept you have to remember. Okay, if this situation arises, consequence is that transfer pricing provision is applicable. All documentations, transfer pricing study report, everything has to be prepared. Okay, and if some of you are interested to know what are the specified domestic transactions to which provisions of transfer pricing is applicable, one may read section 92BA. You can just have a look at here. It is talking about these certain transactions which are specified in section 80A, 80IA, 80, section 10AA. These are certain provisions. And some transactions, some are mentioned under these sections. These transactions will be treated as specified domestic transactions, provided the value of this transaction exceeds rupees 20 crore. Then only they'll be treated as specified domestic transaction. And once they're specified domestic transactions, then again, and if they're between associated enterprises, then the provisions of transfer pricing gets attracted. Once it gets attracted, then there is a requirement to compute arm's length price by applying any of these methods. You can see it. 6 methods are there. Comparable uncontrolled price methods, occur CUP or CUF method, then resale price method. Okay, then cost plus method, CPM, then profit split method. Okay, then you see transactional net margin method. Then any other method as may be prescribed by the board. These are certain methods applying which ALP can be computed. If any of you is interested to know what is the meaning of associated enterprise, section 92A defines it. Okay, if there is a long list, in fact, you can look at here. If one party is directly or indirectly controlling, not exactly controlling, is somehow managing or influencing, then they will be treated as associated enterprise. Okay, there is also a concept of deemed to be associated enterprise. There is a list of situations which are explained here. One can go through it. Section 92A, meaning of associated enterprise. Section 92C is talking about the meaning of transactions. That also one can look at here. I think the concept of deemed deemed transactions between associated enterprise is clear to you now. Thank you very much.